Welcome back. Shifting our attention to commodities now. Manisha is here with us. Manisha, what are you looking at?
Nima, thank you so much for that. While the ferrous metals seem to be doing quite okay, the non-ferrous metals have seen a continuous decline. Over the last 1 week, we've seen copper, aluminum, nickel, all of those metals decline. And that's exactly how we've seen the Asian markets today open up as well. So the strength in US dollar, which is trading at a 6-month high, definitely has been a deterrent there. And then the markets are looking at the interest rate cycle, which might be higher for longer. That clearly has been bothering the space. You also are looking at Chinese demand uneven. Even as the month of August, the data has been slightly on the positive side, but the property sector is still weak, and we have seen concerning statements come in from there. Markets also are looking at inventories, which have continued to pile up, especially in the months of June, July and August. September clearly has been on the same lines as well, and that has put pressure. Markets are looking at copper inventories actually gain up by nearly 50% in the month of September. When you look at the inventories from the month of July, we are up by 175%. So we are standing at 162,000 tons at this point in time, which is the highest copper inventories that you have seen since 2021. If you want to buy copper right now, it's cheaper by $64 a ton as versus in 3 months going forward, which is also a highest discount in case of copper cash since 1994. That tells you that currently the supplies are higher and demand not so strong, and that's weighing on as well. This is the inventory picture that we've seen in case of copper. You were standing at a deficit of 72,000 tons in June. July, this number has come down to 19,000. Markets do believe if this is the picture that continues, you could be looking at a break-even or even a smaller surplus coming in case of copper by the next quarter. It's not just copper. Nickel is trading at a 14-month lows. You have seen pressure continue for aluminum as well, which is trading at around 3-week lows as well. Here as well, the markets have seen inventories on the weaker side. Lead inventories, for example, are also trading at the highest since 2021. So markets are actually dealing with higher production from China. Europe seems to be picking up, and inventories on LME are higher because on-ground demand is slightly lower. This is the chart picture where we are looking at aluminum trading below 50 days moving average, above rather, but below 200 days moving average. So currently seems consolidating, but the near-term picture is still on the weaker side. And that's copper for you, which has seen constant decline. It's trading below 50 DMA and 200 days moving average as well. So on charts as well, there's not so much of bullish cues or enthusiasm coming in. This is what we've done on a week-on-week and a month-on-month basis for many of these metal prices. As you can see, on week-on-week, everything has seen a decline. Zinc, barring that, because that saw some gains coming in on Friday. But on a month-on-month basis as well, barring aluminum and zinc, we've seen more pressure come in for copper. So underperformance clearly coming in from Dr. Copper, as we call it. So that really tells you on where we are headed.
Okay, Manisha, thank you very much for that.